Hello, everyone. Welcome to the first episode of this new series that I am going to be calling Market in 5. Basically, I'm going to go through all the major indexes, at least for now, and show you, tell you about some of the insights that I have gathered throughout the day and read them to you every day of the market week. And on the weekends, we might do a little bit of something different. But for now, this is what we're gonna go ahead and do. So each day after this video, you can expect on each market day, each day that the market's open, a report after the market closed of why exactly you saw the market closing the way that it did, and perhaps a few insights that you might not have gathered from multiple news sources explaining why each of these things happened. So without further ado, let's get into it. We're going to start off with the S&P 500, which did see a negative change of 0.02% at close today. I've got three reasons for you. The first one is semiconductor sector impact. So the primary driver behind the dip was news from the semiconductor sector. ASML, a leading chip manufacturing equipment provider, released weaker than expected forecast for 2025, along with a disappointing earnings report. The company cited geopolitical restrictions limiting its sales to China and reduced demand from key clients like Intel and Samsung. Number two, it's the ripple effect across tech stocks. ASML's poor outlook triggered a sell-off across other semiconductor-related companies, including KLA, Lam Research, and Applied Materials. This created downward pressure on tech-heavy indexes like Nasdaq, which ultimately weighed on the S&P 500's performance for the day. Number three, we have the earnings season and market caution. Adding to the market's cautious tone, Q3 earnings season was just getting underway. Investors were waiting to see how corporate earnings and guidance would shape up, leaving the broader market flat. Uncertainty about the future interest rate policies also played into the mixed sentiment, keeping the market on edge despite strong results from some companies. Moving on to the Nasdaq, we have a modest gain of 0.30% at close. Here are the key drivers behind the Nasdaq's performance today. AI and tech optimism. Investors showed enthusiasm towards AI and cloud computing stocks, which companies like Microsoft and Nvidia leading the charge. Microsoft's AI initiatives continue to attract attention as the company announced it is aggressively integrating AI into all aspects of its business, fueling positive market sentiment on that. Earnings season anticipation. Although broader caution was present due to mixed earnings reports from companies such as ASML, other big tech giants are set to report soon, including Alphabet and Meta. This anticipation lifted tech-heavy indexes, especially with expectations of AI-driven growth from these firms. Number three, big movers in supporting index gains. A positive outlook from Amazon's cloud segment and the market's focus on AI growth also buoyed investor confidence, helping the Nasdaq overcome earlier sector volatility. Despite some turbulence from the companies with weaker than expected reports, the overall narrative of tech innovation kept the index slightly elevated. Now, on to Dow Jones. The Dow Jones Industrial Average closed with a slight loss of 0.04% on October 17th today. It's lower than any other index, And that was for the following three reasons. One, mixed bank earnings. Well, Morgan Stanley reported strong results driven by its trading business. Goldman Sachs earnings fell short of expectations, contributing to the negative sentiment. The disparity between these financial giants created uncertainty in the market. Number two, banking sector impact. Ongoing concerns about weaker investment banking activity weighed on financial stocks, a key component of the index, the Dow Jones. Number three, broader market caution. Investors remain cautious ahead of further corporate earnings releases and economic updates, contributing to the Dow's subdued performance despite some positive earnings surprises. So that's it for now. And as always, I hope you found this informative and entertaining. Let me know what you think of the new video format, and certainly just feel free to leave any comments with your questions or concerns about this content. Thank you so much for watching, and I will see you soon. Thank you.